So let's talk about how AI has made the fintech space better. Earlier, you used to have a call center where you had to call the bank or call the credit card company and wait for whatever God forsaken duration. Today, there are chatbots which are integrated. These chatbots earlier used to be just based on simple decisions and simple tasks. Now, the chatbots understand natural language or natural language processing, but they take it one step further. These chatbots also have natural language generation. And by natural language generation, you will not even be able to find out whether you're actually talking to a real person or you're talking to a chatbot. The advantage of this is that you are able to make it more personal. The chatbots automatically give you the information that you want in a personalized manner, which helps employee retention. The chatbots can also go one step further and get a feedback, a survey, a score from you, whether you've been happy with the bank, something that you can improve on. All this is based on the context that has been discussed. Now, this is a pattern that is picked up by AI, which is driven by the entire transactional records, the spend capacity, the spending patterns, where the machine learning algorithm starts looking at how a person behaves, what a person can actually do, and how it will benefit the financial institution. Forensics, financial forensics. What is the money trail? What is your spend pattern? Are there any anomalies in your spending? All these can actually help the banks decide whether there is a potential non-performing asset in them and how to mitigate that risk. Personalized and targeted marketing is another aspect which is automatically come out. There are startups here which actually talk about not just how much you spend, but how you spend. Looking at different kinds of patterns, your socio-economic standards, the geographic pattern, the contextual spending, the anomalous spending, the goals of a particular person can all be identified or all can be driven just by looking at their transaction history. Simple things like how often a person travels, how a person drives, what are the health metrics, all these things can determine even an insurance premium for a particular company. Now, this automatically helps in risk assessment. Now, the underwriters, or which used to be a case which a person determines whether you are eligible for a loan or the insurance premium, all these things used to be decided based on intuition, human intuition. Now, using artificial intelligence, machine learning, and predictive analytical generative algorithms, these underwriters now have a whole bunch of data that they can choose from to actually give you a score, a risk assessment score. And soon enough, the more and more this particular model gets trained, it is probably going to be a machine learning system itself which gives you an entire score for this. Investments for wealth management as well as for institutional investments are predicted based on the context. You can have models which put in anomalous conditions, like we had a pandemic. What happens if there is a war? What happens if there is a seismic event? What happens if there is a complete crash in a particular economy of a country? How will this investment be changed at an institutional level, at a personal level, at a wealth management level? And all these things can now be modeled, trained, and constrained. And this helps people understand what kind of pattern we're going in. This also helps us get accurate results. This also helps us bring in the accuracy for predictions. Now, claim settlements, renewals in insurance companies today are a laborious process, which is a lot to do with processes between different insurance companies, between different departments, between different people. All this can be very easily handled if there is an algorithm which knows not only the process but also the patterns behind it. In the last maybe a decade, instead of using AI people have been using a lot of what we call as robotic process automation, or RPA. RPA is different from AI modeling. RPAs are process workflows which are predefined steps for predefined actions and responses. This should not be mixed or confused with artificial intelligence, machine learning, and generation and prediction models. Index GPT is a great example that JP Morgan Chase is coming up with. Details are not clear, but if it can tell you how to pick stock or financial securities, it's going to be a game changer for a lot of people. But for whom is it actually making a difference? For the consumers? Is it actually making jobs obsolete? Yes. But which jobs? The ones which are repetitive, the ones which are knowledge based on data, but not the ones which have intellect involved in it. So if you want to survive in the fintech industry, you cannot be restricted for massaging data, by being in the report or repetitive, or using tools to reduce or to improve your efficiency by reducing the time. But we will have to figure out new innovative ways where we use our intellect. And these things are going to enable generative AI, predictive AI to get rid of all the increasing costs that are associated. Now, if the fintech industry can improve its operational efficiency using these tools, it's a big win. At the same time, if it can help define or predict consumer behavior, it is going to increase revenues. And these are exactly the tools which make artificial intelligence and machine learning fantastic for the fintech industry. So using artificial intelligence and machine learning along with prediction, if we can recognize patterns, if we can make it more personal, get accurate results, and ensure that the operational efficiency of an institution, a financial institution, improves, the revenue increases, this is a win for the fintech industry.